Hello friends, in our previous lecture we have started chapter number 5 of accountancy, and that was the business accounting equation with business transactions. We have started a sum where we have completed 5 transactions, and this was the format, so I have readily kept the format that yesterday we have seen 5 transactions. Now we are going for the 6th transaction. Before starting that 6th transaction, again I may read that 5th transaction what we have written. So in the 5th transaction yesterday, we have written 5th entry as Jocelyn account debit to sales account to profit on sales of goods, 55,000 for Jocelyn, 35,000 for sales, and profit was 20,000. Why we have seen the profit? Because in the question clearly it was given that goods are of 35,000 are sold to Jocelyn at 55,000 and Jocelyn is not paying them out. So Jocelyn is the receiver, Jocelyn account debit. Moreover, we are selling the goods, sales account credit, and the amount of goods was 35,000 and Jocelyn is getting for 55,000. So remaining credit side is the profit. And we have given its effect as now Jocelyn has not paid the amount, she will pay in future, so we will receive that amount. So for that it is our receivable, for sales always it is receivable, for purchase it is always payable. So Jocelyn is the receivable we have shown on asset side. We are selling the goods and that cost price is subtracted from goods were of 70,000. Sales of cost price was 35,000, so remaining goods are 35,000. Then cash was 30,000, bank was 20,000. Capital was 80,000 plus we have added the profit, so capital is 1 lakh and Himani in the liability side was 80,000. So this was the status of our previous transaction. Now we are going for the 6th transaction. So again the same type of transaction what we have done yesterday is given that goods of 10,000 sold for 18,000 in cash. Again we are selling the goods. Goods are going out, sales account credit. But goods are of 10,000. We are selling for cash, so we are receiving cash of 18,000. Like for previous transaction, Jocelyn was getting for 55,000, goods were of 35,000, so remaining 20,000 was credit side profit. In the same way, we are receiving cash, so cash is coming of 18,000, cash is debited 18,000. Goods are going out, sales account will be credited for 10,000, remaining 8,000 is our profit on sale of goods. Again, we are getting a profit. Yeah, let's do cash account debit to sales account to profit on sale of goods account. We are getting cash for 18,000, so cash debit 18,000. Our goods are going out, so sales with credit with 10,000, and the remaining 18 minus 10, 8,000 is our profit. So that is profit on goods on sale, being goods of rupees 10,000 sold for rupees 18,000 on cash. Now let's understand where to give the. We are receiving cash of 18,000, so cash is coming. Now what was the previous cash? Let us check for the previous transaction. That cash is of rupees 30,000. Comparing previous transaction, cash was yesterday 30,000. See, the sum is continued, okay? And as I said in exam, only one entry will be asked and its effect will be asked. So I can give in this way also. I can give the same transaction that goods of 10,000 are sold for 18,000 for cash. Then you will write this journal entry. Plus I will give the details what I am giving now. Plus I will give the details that we are having Jocelyn of 55,000, goods of 35,000, cash of 30,000, bank of 20,000. I will give this information. Capital of 1 lakh and Himani for 40,000. I can give that information and I can ask this entry. Okay. So yesterday cash was 30,000. Now we are getting the cash plus sales amount 18,000. Write this amount, or instead if you are getting confused, then plus cash for sale. Cash for sale 18,000. So now our total cash is 48,000. Now cash account debit, cash has come in. The previous cash was 30,000. Now we are getting 18,000. So now we are having cash of 48,000. Now sales account credit, goods are going out, so again it will affect the goods account also. So previously our goods were 35,000. How 35? 70 minus 35 is 35. So our goods are of 35,000 minus sales in bracket cost. Again we will write only the cost price because our goods are going for only 10,000. So now we are having goods of 25,000 in the business, and also we are getting a profit. Friends, I have said yesterday, the profit, losses, incomes and expense are shown in capital. So the previous capital was 80 plus 20. So previous capital was 1 lakh with us. Now we are again getting profit plus profit on sales of goods 8,000. So our net capital is 1 lakh plus 8,000, 1 lakh 8,000. No change in any other thing. So cash is received for sales, cash account debit. So cash account debit, cash is coming in, so we are added to cash. Then sales account credit, goods are going out, goods were 35 and cost price of goods going out is 10,000, so goods are of 25,000. We are getting profit, so profit is to be added to capital, loss is to be subtracted, expense is to be subtracted and income is to be added. 1 lakh 8,000. Now remaining all the things will be same. Now check. In the previous transaction, Jocelyn will be same. Jocelyn in bracket we will write receivable because we have to receive an amount for future. 55,000. Goods we have already written. Cash we have already written. Now bank. The things which we have not written, you have to check from previous transaction, my friends. Then capital we have written and Himani. Himani 40,000. Yeah. Now there is no requirement of this phone. Yeah. Now let's take the total. 48,000, 25,000, 55,000, 20,000. It's 1,48,000. Here it's 1,08,000. And here it's 48,000. So friends, 1,48,000 is equals to 1,08,000 plus 40. 8 plus 40 is 1,48,000. So again, we are getting assets equals to liability. So the straight line should be there, okay? If you are drawing from here, then it will go down. It's okay that space is wasted. The line should be continue for both the pages. Yeah. 7th transaction. Goods of 2,000 returned by Himani. Now we have purchased the goods from Himani on 7th date. Sorry, not 7th. 3rd date. 3rd entry was purchase account debit to Himani account. We have purchased goods of 40,000. So purchase was debited. So goods are coming in. We have added to goods, and we have not paid the amount to Himani. We will pay in future. So Himani was our liability. Now we are returning back the goods. So 3rd transaction was purchased to Himani. Now we are returning back to Himani to purchase returns. Himani account debit to purchase returns account. We are returning for 2,000. Okay. B. Goods purchased from Himani on 3rd are returned. I have to clear on 3rd because we have to compare with that. Now friends, you have to remember, you have to use one common sense here. In 3rd transaction, we are purchasing from Himani and not paying them. So goods are coming in and Himani is the giver. So Himani in future we have to pay 40,000. So that we are writing Himani 40,000. Now whenever we are returning back, that liability will be decreased because first we have purchased for 40,000, so our liability was 40,000. From that 40,000 we are returning back. See, here you cannot understand that why we are writing Himani, then why we are subtracting from here, why we are not adding that. You have to remember now technically that first you have purchased for 40,000. Now you are giving back, so that 40,000 will be 2,000 less. So our liability now will be 38,000. But you have to remember by your mind. So that Himani is now 38,000. Moreover, we are returning the goods, so our goods are going up. Okay? Yes. So Himani account debit. So first of all, we will give the effect for Himani. Himani was 40,000 minus PR. PR means purchase returns. Short form of purchase returns is PR. Amount is 2,000. So the net liability will be 38,000. 40,000 minus 2,000. Moreover, we are returning the back goods. So goods we are having 25,000. Net goods are 25,000 minus PR means purchase returns, and bracket write the name Himani 2,000. So remaining goods will be 23,000. Okay, see, from here you cannot understand that you have to subtract from Himani. You have to remember by yourself, and you have to use your mind that we have purchased, so our liability is increased. Now we are returning back, so our liability will decrease. Moreover, our goods are also decreasing. Remaining things will be same. Cash. Write the net amount only 48,000. Then goods we have already written. Justly. In bracket receivable 55,000 and bank. Don't forget any amount. Then capital. Write only the net amount 1,08,000. That's all. 23,000, 48,000, 55,000 and 20,000. It's 146. Here it will be 1,08,000. Here it would be 38,000. So let us check again that 1,08,000 plus 38,000 is 1,46,000. So again we are correct. Number 8. Now goods of 4,000 returned by Justin. Now, yesterday's 5th transaction, this is 6th. We have sold the goods to Jocelyn. At that time, we have written the entry as Jocelyn account debit to sales to profit. Now, ignore that profit because we are returning back, so profit effect is not to be given. So, whenever we are selling the goods, Jocelyn is the receiver, so receivable, and goods are going out, so sales credit. Now she is returning back, so we are receiving the goods, so sales return will be debited, Jocelyn will be credited. Again the same thing will be done, that whenever we are purchase returning, our goods are going out, so minus. Now sales return, our goods are coming in plus. Our liability is decreasing, here our receivable will decrease because Jocelyn is returning. Don't think our receivable will increase, because it will not increase, because see, we have to pay 40,000 to Himani. Now we have returned, so liability decreased. In the same way, we have to pay to Jocelyn have to pay to us, so we have to receive. Now she is returning back, so again that amount will be decreased. Yeah. Sales returns account debit to Jocelyn account for 4,000. Being goods returned by, write the whole, being goods sold to Jocelyn on 5th are returned. Okay, so that you can understand. Now goods are coming in through sales returns. The goods are 23,000. Goods are coming in, so plus SR. SR means sales return 4,000. Now the goods are of 27,000. In the same way, Jocelyn, I will write in short, REC means receivable. we have to receive 55,000. Now she is returning back the goods, so minus sales return 4,000. So we are having now 51,000 from Justin. Because we have to receive 55,000. She is giving back the goods for 4,000 now, so we will have only 51,000. Other things are same. So goods have been cash. Cash will be 48,000 only. Then Justin have come. Now bank. Bank will be 20,000. Then capital will be 1,08,000. And Himani will be 38,000. Now we are taking the total. Total will not change. Why will not change? From goods we have added and Justin we have subtracted. So we have given the effect on one side. So 27,000, 51,000, 48,000, 20,000. Again it is 146 only. So 146, 108 and 38. So again the things are same. Number 9 is very important. Accounts are settled with Himani and Justin. Accounts are settled means the payment is done. Accounts are settled means the payment is done to Himani and received from Justin. Why to Himani? Because we have to pay to Himani 38,000. We have to receive from Justin 51,000. And what we have to receive cash and what we have to pay cash. So two entries are to be written. First we are taking for Himani. We are paying because it is our liability, we have to pay. Cash is going out, Himani is the receiver. Himani account debit to cash account. What will be the amount? 38,000 because we have to pay net 38,000 rupees, not 40,000. Second one, we will receive the cash opposite because Himani we have to pay, so cash will go out, Himani is the receiver. Justin we have to receive, so Justin is the giver, cash is received to us. So cash to Justin. Now the amount will be 51,000, not 55,000 because returns have been done. Being accounts are settled with Justin and Himani. But friends, you have to remember that liability means we have to pay and receivable means we have to receive. Okay? For that only you can understand. Now Himani, the whole amount is paid. So Himani was 38,000 minus payment. So P by MT short form. 38,000. So Himani will be dash. In the same way, Justin 51,000 minus payment 51,000. So Justin is also dash. Okay. Now after that cash. Now cash is 48,000. Now remember one thing. We have paid to Himani, so cash is going out. So minus Himani 38,000. So cash is now 10,000. And we are receiving from Justin, so plus Justin 51,000. So now we are having cash of 61,000. So in this way you have to do. Again remember, we are paying to Himani, so liability will be over. We are receiving from Justin, so receivable also will be over. Now give the effect in cash. We have paid to Himani, so minus we have received from Justin, so plus. Other all things are same. Goods are 23,000. Cash have came, Justin has gone. Bank 20,000. Capital 1,08,000. Okay, let's take the total. 61, 23 and 20 it is. Sorry, goods are not 23, goods are 27. It's my mistake. 61,000, 27,000 and 20,000. 1,08,000. Here also 1,08,000. Now if both are same, then here it will be 0 or T dash. Make a line. So this is the status. Now I will rub the whole thing, but I will not rub this because I want this thing. Okay. Okay. Sorry. I have to make the total also. Here it was 18,000, here it was 10,000 and here it was 8,000. So first I would like to take the total. Now see, total till fifth transaction was 2,25,000. Now continue. 2,25,000 plus 18,000 plus 2,000 plus 4,000 plus 38,000 plus 51,000. 338. Again we will check here also. 2,25,000 plus 10,000 plus 8,000 plus 2,000 plus 4,000 plus 38,000 plus 51,000. 338. So I will write it. 338. Now I will run. So these sums are little bit time consuming. Our time is consumed so much. So let me draw again. Okay. Thank you. Withdrew 5,000 from the bank. We are withdrawing from the bank. So cash is coming in, bank is the giver. So cash is coming in, so cash account debit. Bank is the giver, bank account credit. Amount I think 5,000. Yeah, 5,000. B. Cash withdrawn from bank. Now cash is coming in, so cash will be increased. Previously cash was 61,000. Now cash is coming in. Withdrawn from bank 5,000. So now our cash will be 66,000. Okay. Moreover, bank is the giver, so bank will be increased. Bank was 20,000 previously, and minus withdrawn. Minus withdrawn cash of 5,000. So bank will be 15,000. Listen here again. We are withdrawing cash. Cash is coming in. Cash was 61,000. So cash 61,000. Plus we are withdrawing from bank. So 5,000. So cash is 66,000. Bank is the giver. Bank was 20,000. Now we are withdrawing from bank the cash 5,000. So bank balance will be 15,000. The remaining things will be same. See now, Justin is not to be written because it has completed. Now goods. Goods are of 27,000. Nothing else. Then capital. Capital will be 1,08,000 only. Nothing in the liability. So 66, 15, 27. 1,08,000 again. Here also 1,08,000. And here it's 0. Now I can rub these things. Salary of 4,000 paid by check. Salary is an expense and we have paid by check. So salary is expense, salary will be debit. We are paying by check, so bank is the giver, bank account credit. So salary account debit to bank. Amount I think 4,000. B. Salary paid by check. Now salary is an expense, and as I said, all the expense, incomes, profits and losses are with capital. Capital is 1,08,000. Now we are incurring an expense, so capital is increasing. So minus salary in bracket expense exp 4,000. So the net capital will be 1,04,000. We are paying to bank. So bank is the giver. We are paying to bank. Bank is the giver. So bank was 15,000 minus salary paid. Sorry. Bank was 15,000. Salary paid is 4,000. So now bank would be 11,000. So salary is paid by check. Salary is the expense. Expense is subtracted. Income is added. Profit is also added. Loss is subtracted. So losses and expense are subtracted. Incomes and profits are added. So we have subtracted from capital. Bank is the giver of this salary. So bank account should be credited and bank should be subtracted because bank is the giver. Remaining all things will be same. So cash is 66,000. Bank has gain and goods. So goods are of 27,000. Okay. Liability will be nothing. $11,000, $66,000, $27,000. It's 1,04,000. And capital is also 1,04,000 plus liability is 0. So it's done. Okay. Now 12th one and 13th one are most important. Please mark that both IMP or make stars for them. 12th one and 13th. We will get very good concept from here. Commission received in cash 3,000 and 2,500 are outstanding. Okay. Commission is received in cash. So cash is received, cash account debit and commission is the income. So commission is credit. So we have to write two entries. So first entry will be cash account debit to commission account. 3,000, 3,000. Now second is similar to it. Why? Commission is received in cash of 3,000 and 2,500 is not received. It is outstanding. Means it is not received. It will be receivable in future. And why it is receivable only? Because here commission is income. From this only we can understand that commission is received, so it is income, and plus 2,500 is outstanding, means it is not received. It will be receivable in future. Now friends, for it name should be given. As we have seen in previous chapter, that name is to be given, because if cash is received, cash to commission, commission is income, commission is credited. In second also commission will be credited, but cash is not received. We have to receive from a person. Name of the person is not given. So whenever the name of person is not given, we have to write in such a way. Commission receivable account debit to commission account. Now I will explain the reason for it. 2500, 2005. Understand the difference between first and second transaction. Both transaction commission is income, because in the starting itself commission is received and commission is outstanding. So commission is the income, it is to be credited, that is a fixed thing. Now for 3000 cash is received, so cash account debit. For the remaining 2500, it is outstanding, means it is not received, it is receivable in future. Name is to be given, but name is not given. So whenever this name is not given, so commission received. If any expense is payable, then expense payable account. So in such a way we have to write when the name is not. Okay friends. Now cash is received. So it will increase the cash. So cash was 66,000 plus commission in cash. Please clear the thing. Commission in cash only, not commission receivable. So cash will be now 69,000. Now commission, cash account debit, so we have added to cash. Commission is the income, so it will be added to capital. Capital was 1,04,000 plus commission in cash 3,000. And one more commission will come, so I am not taking the total. Now here, commission receivable. Now you have two aspects, assets and liability. Commission is not received, it is receivable in future, so it is receivable. As Jasmine was receivable, now commission is receivable, so it is our asset. What we have not received and receivable in future, it is our asset. So commission receivable 2,500. And again to commission account credit, so again commission is there plus commission not received 2,500, but it is income. Cash is only not received, but income is there. Income is accurate, means income is there. So we have added to capital. Now again I will explain. In the book they are telling that 3,000 commission of 3,000 is received in cash. So here commission is income. Commission can be expense also. Commission of 3,000 is received in cash. So cash is received, commission is income. Cash and commission. And 2,500 commission is outstanding, means it is not received, it is receivable in future. You have to understand that outstanding is payable also, outstanding is receivable also. Something is to be paid, something is to be received. But here the meaning is receivable. Why? Because from the continuous transaction we can understand. Now for that name is not given. So commission is income, commission is credit, but name is not given, so write commission receivable. If name was not given and it was expense, then commission payable. In the same way we can write for everything. Being commission received in cash rupees 3,000 and rupees 2,500 is outstanding. Now let us again explain the effects. That cash is received for commission, so cash was 66 plus commission received in cash 3,000, so 69. So cash is over. Now commission is an income, it is added to capital. Now again commission receivable, it is not received, it will be receivable in future, so it is our asset. Commission receivable to commission account, it is also a type of income. This is also income, this is also income, so again it is added to capital. Okay, now net capital is 1,09,500 and the remaining things here. See bank. Okay, so bank is 15,000. Cash and goods 27,000. Now let's take the total. Liabilities nothing. Here dash, here 1,09,500 and here 69,000, 2,500, 15,000, 27,000. 135. 69,000, 2,500. Okay, sorry, again I have made mistake in writing. Bank is actually 11,000. Okay, this is my mistake. 69,000, 2,500, 11,000, 27,000. 1,10,000. Rent was 11,000. Okay, by mistake I have written 15. Now this was about income. Now the same concept is given in 13th one for expense. Same thing. For expense also they are given. Here one is received in cash and another is receivable. Now one will be paid in cash and another will be payable, which is given in 13th one. Rent is paid in cash, 4,000 and 1,500 is outstanding. Now this outstanding is payable. This commission outstanding was receivable because in the previous, from the starting itself we can understand. Commission received and another is outstanding means commission receivable. Rent is paid and another is outstanding, so paid will become payable. Outstanding means sometimes it can be payable, sometimes it is receivable. It is according to the sentence given. Understand the thing. From 12th question, commission received and next is outstanding, so commission received and one will be receivable. It cannot be payable. In the same way, rent is paid and next is outstanding, so rent is paid and next would be rent paid. So now rent is paid in cash. Rent is an expense, rent would be debited. Cash is paid, cash goes out. Rent account debit to cash for 4,000. Second one, rent is paid in cash, so rent is expense, cash is paid. Second one, rent is outstanding, so rent is expense, so rent would be debited. Here commission is income, commission was credited. Now in the opposite side, name is not given, so we will write rent payable. Okay, so rent is expense, rent would be always debited, and cash is paid, so cash credit. We are not paying the cash in second one, so we will write rent payable account 1,550. B, rent paid in cash rupees 4,000 and rupees 1,500 is outstanding. So friends, when name is not given, you have to use the same word. Here commission is received and another is received outstanding, so receivable. Here rent is paid and another is outstanding, so rent payable. Now we will give this. Rent is expense, so expense and incomes are in capital only. So capital is 1,09,500. Now expense minus rent paid in cash 4,000. One more rent will come, so I am not taking the total. Moreover, cash is paid. So cash is 69,000 minus rent paid in cash rupees 4,000. So cash would be 65,000. Okay. See, rent is expense, rent is subtracted from capital. Cash is paid, so cash is also subtracted. Again rent is an expense, again we will subtract, minus rent not paid in cash 1,500. So now the net capital would be 1,04,000. Net capital would be 1,04,000. And the remaining rent is payable. Rent is again expense and rent is payable. When it is receivable, it is our asset. When it is payable, it is our liability. So rent payable 1,500. Again I will explain. Same to this, it is here. Both first one. Here commission is received in cash, so cash is received, we have added to cash. Commission is income, we have added to capital. Here rent is expense, it is paid in cash. Rent is expense, rent account debit and subtracted from capital as it is expense, and cash is paid, cash goes out, subtracted from cash. Now both second one. Now commission is outstanding, and that outstanding is now in the way of receivable, because one is received and another is outstanding, means it is receivable. So name is not given, commission is income, so commission is fixed credit, and name is not given, so we have written commission received. Now receivables are our assets, so on asset side, and again commission is income, so again added to capital. In the same way, rent is not paid. Now rent is outstanding, means here it is payable, here outstanding is receivable. Reason is that one is received and another is paid. Okay, so rent is now not paid, it is payable. So again rent is expense, rent will be debited and subtracted from capital, and it is not paid, it is payable in future. So payables are our liabilities. So both are same, and no change in all other things. So cash have gain, commission received. $2,500, bank 11,000, and goods 27,000. Now let's take total. $65,000, 2,500, 65,000, 2,500, 11,000, and 27,000. It's 1,05,500. 1,05,500. Here it is 1,04,000, and here it is 1,500. Now friends, we can check. 1,05,500 equals to 1,04,000 plus 1,500. It is again 1,05,000. So today we have completed so much important transactions. Now till 13 we are stopping. So I am taking the total again. See, the total till 9th one was 3,38,000. Now again plus 5,000 plus 4,000 plus 3,000 plus 2,500 plus 4,000 plus 1,500. So 3,58,000. Again here also 3,38,000 plus 5,000 plus 4,000 plus 3,000 plus 2,500 plus 4,000 plus 1,500. So total till here is 3,58,000. And tomorrow for 14th question we need this data. So I will take again a screenshot of this. Okay, tomorrow for 14th transaction we need this information. Okay, so that's all for today. Write these things and watch this video more than once. For that only you can understand. Okay, so that's all for today. Thank you so much.